Right now, a lot of people are stuck between two options: 3-year fixed or variable. And honestly, I think people are focusing too much on trying to guess where rates are going and not enough on how these mortgages actually behave in real life. Because the truth is, you can be technically right about rates and still choose the wrong mortgage. Hey, Becky here, independent mortgage broker since 2004, and today I'm going to break down the difference between the 3-year fixed and the variable, not just mathematically, psychologically, financially, and strategically, because this decision is about way more than who has the lower rate today. Okay, let's keep this simple. The 3-year fix means your rate is locked in, your payment stays stable, you know exactly what you're paying for 3 years. It gives you predictability. But you're also committed for that term unless you refinance, sell, or break the mortgage. With a variable, your rate moves with prime. Your payment or interest costs can change. You benefit faster if rates come down, but you're also exposed if rates move higher. And we've all seen how quickly that can happen. Here's where people get this wrong. They ask, which one will save me more money, or which rate is lower? And honestly, I think that's the wrong starting point. The better question is, what kind of mortgage can I realistically handle if things don't go perfectly? Because life doesn't happen in spreadsheets. People move, relationships change, jobs change, kids happen, stress happens. And mortgage decisions feel very different emotionally when you're living through them versus talking about them online. The 3-year fixed tends to work well for people who want stability right now, don't want full variable rate exposure, aren't comfortable watching rates constantly, want a middle ground strategy. And honestly, that's why it's becoming so popular. Not because we think rates are crashing in 3 years, but because psychologically, a lot of borrowers are tired of uncertainty. It just creates some breathing room. Now, variable absolutely could outperform the fixed, especially if rates start dropping and cuts happen faster than expected, or you keep the mortgage long enough to ride the cycle down. Variable mortgages also come with a 3-month interest penalty only, which tend to be lower than interest rate differential penalties that come with fixed rate mortgages. So that part matters, especially if there's a chance you could break the mortgage early. But you have to actually be emotionally comfortable riding those ups and downs, because variable feels amazing during falling rate environments and stressful during rising rate environments. We literally just watched that happen. This is the part nobody's talking about. People don't usually lose money because they picked the wrong rate. They lose money because they pick the wrong structure for their personality and situation. They panic and lock in at the wrong time, break the mortgage early, take on more risk than they can emotionally handle, or choose based purely on rate without understanding the product. That's why I talk about mortgage structure so much, because a lower rate doesn't automatically mean a better mortgage. And this is also why penalties matter. In my last video, I showed a real penalty calculation for a client who was only 1 year into a 3-year fixed mortgage with TD. The penalty was over $7,000 on a balance under $200,000. Now, that doesn't mean fixed mortgages are bad. It just means mortgage decisions should never be made based on today's rate, because life changes. And if there's even a chance you might move, refinance, separate, relocate, upgrade, or change plans, the penalty side matters too. So, is the 3-year fixed smarter or is the variable the better move? Honestly, neither one is automatically right. It depends on your comfort level with risk, your future plans, your income stability, your personality, and how flexible you need your mortgage to be. Because the right mortgage isn't about chasing the lowest rate, it's about choosing the right structure.